Let's continue the project monthly financial statement creation. Task number 2, prepare the company's pro forma income statement for the next month through year end. So here again, the reason why we create the schedules, operating schedules of sales, purchase schedules, and then wages and commission schedules is to forecast all the business activities throughout the year, right? And then we extract actual cash collections and cash disbursement because all the business transactions are based on the accrual basis on credit. Now and then based on that schedule, we created this cash budget, how much we need cash, right? And then let's take that the business activities from the schedules and from the descriptions on the budgeted income statement. Okay, it's pretty simple. The sales from schedule A, the forecasted here. Then the cost of goods sold from schedule, I believe schedule B on purchase schedule, where we calculate cost of goods sold 70% of current sales, right? And then the gross margin is just, by the way, we need to build in the income statement when we measure the expenses or cost minus, and then plus. So the gross margin of this the April is 34,500. Now operating expenses. On the operating expenses, here the wages and commissions, we collect wages and commissions. Here we go, right? 23,000. Then we put minus. And then rent from schedule D, because we didn't have the schedules of the rent. Again, the actual cash payment of the rent and expenses are the same. We don't need to create the schedules. Instead, we directly define this the rent, the cash payment here, minus 46 every month. And then miscellaneous expense, also we directly get that expenses from the schedule D, which is cash budget, the miscellaneous, there you go. And then the insurance, okay, based on the description, the insurance here, we need to read this clearly, understand it clearly. The PDC plans to draw the prepaid insurance. Okay, when the company paid the insurance, that has the coverage for the periods, right? And then that prepaid expenses is the accounted in the asset category. But once the company get the insurance service throughout the period, and then that is converted into expenses. So all the prepaid expenses in the asset is amortized by the recognition of the insurance expense, right? So how much was that? The insurance expense per month is $460, right? So we need to put this $460 every month, right? And then depreciation also the same from the description, 1,150 depreciation expense. There you go, right? And then total operating expenses is those up, right? All the expenses. Again, that is the expenses, not the cash out, actual cash out amount. So we got this, the operating expenses, and then income from operation is the gross margin plus operating expense. And then, okay, let's assume that the company doesn't have the tax payment, just started their business. So we just assume that there's no tax, and then the interest expense here, how to get that interest expense from schedule D, which is cash budget, right? Interest, there you go. But it should be converted into the negative amount. And then the income is just the sum of the income from operation minus the interest expense. So we got 460. Now let's drag all this number throughout the years. So we got those operating expenses. Let me just make sure that if it is correct or not. Then we have a 63, and then 265, all the expenses. And then I believe all these numbers are correct. Okay, that's all. Okay, all this information also, we end up in the net income that should be now accumulated in the owner's equity every month. Okay, and then in the next video clip, I will cover how to create the budget to the balance sheet, a little bit longer procedures, creating each the balance of account. Okay, see you in the next video clip. Bye bye.